What's going on YouTube? It's Gana Mo.
The focus of today's video will be on the upcoming election and the effect it will have on your finances, putting President Trump and Vice President Biden's tax policies front and center. As a healthcare finance channel, we feel it's our duty to provide you with factual information regarding the upcoming election and the effect it will have on your pay stubs, your taxes, and your financial investments, without allowing any political bias on our end.
The federal budget and the deficit are projected to grow by $4 trillion in the wake of this pandemic. As such, there is no denying that the current and future tax codes are and will be extremely crucial to the federal government's balance sheet and our households' budgets. Biden has a tax plan that will generate between $3.35 and $4 trillion over the next 10 years, with the money coming mostly from America's richest households. The basic Biden story is that if you're rich or a corporation, you are going to be paying more taxes. However, if you're middle class or make a lower income, you're going to be paying the same, if not lower taxes, depending on your circumstances.
In sharp contrast, Trump's story is a little bit different. He wants to cut taxes even further, without any clear indication on how he's truly going to do that. Even his closest advisors couldn't even answer that. Don't believe us? Ask Howard Gleckman, a senior advisor at the Tax Policy Center, who couldn't even answer that. To be fair though, President Trump does have a first-term record that includes the 2017 Tax Cuts and Jobs Act, which was an overhaul that reduced income tax rates while expanding credits and allowing some exemptions while capping others. The IRS statistics showed that taxpayers pay nearly $64 billion less in income tax during the first year of President Trump's 2017 Tax Act than the year before.
Now let's dig a little bit deeper on how this election will affect your paycheck as you see it on your pay stubs. With each paycheck, Uncle Sam always manages to take his cut. His cut comes in the form of payroll taxes, which consist of 6.2% that an employee pays into Social Security, and 6.2% that the employer pays into Social Security for that employee, for a total of 12.4%. The employer and the employee also pay 1.45% for a total of 2.9% for Medicare taxes. Employees and employers currently pay the 12.4% on the first $137,700 that the individual person earns.
Several months ago, President Trump authorized employers to allow their employees who are making less than $104,000 per year to defer payment on their 6.2% tax obligation between the months of September to December 2020, which resulted in a bigger check now. However, let's be clear, these are taxes that still have to be paid. However, President Trump is pushing lawmakers to forgive these deferred taxes.
Presidential nominee Joe Biden wants the 12.4% Social Security tax to be kicked back in for incomes above $400,000. The move takes aim at the country's highest earners, which would include some doctors, but not all healthcare providers.
Next on the agenda, income tax return. How will President Trump and Vice President Biden's policies affect your income tax return? Vice President Biden wants to put the top income tax bracket back into play from Obama's era of 39.6%, a 2.6% increase from the current income tax bracket of 37% under President Trump for anybody making more than $400,000 per year. So, what does that all mean? Well, people making under the $400,000 income threshold will see a 0.9% after-tax income decrease. In comparison to those making more than $400,000 per year, will see a 17.7% after-tax income decrease. So, in all reality, both groups of people, whether you're making more than $400,000 or less than $400,000 per year, will see a decrease in their after-tax income. In addition to Vice President Biden's tax policies, the corporate tax rate would increase from 21 to 28%, which would have an indirect trickle and negative effect on the wages and benefits of lower income employees employed by the larger corporations.
Biden would also cap the value on the itemized deductions, capping the value of the itemized deduction at 28%. The cap would apply even if the taxpayer was taxed at a higher rate. With an across-the-board cap, Biden is trying to avoid which deductions deserve more or less of a break. Biden is also calling for a tax credit for renters and a larger tax credit for children. The Trump administration temporarily increased the tax credit for children from $1,000 to $2,000. Biden would turn that credit up to $4,000.
Now, President Trump has not yet released any information regarding his plan with income taxes for his second term in White House. But the White House budget has released information regarding the 2019 through 2021 fiscal year, and we can assume the income tax rates will become permanent.
Trump has also said that he's considering a tax cut for middle-class families. Trump doesn't have many tax proposal specifics right now. However, he did say that he is going to be overhauling the tax code again and dropping everyone's taxes. And the one thing that Trump does have is that he does have a tax record to run off of, for better or worse, depending on who you ask. Don't ask us though, our lips are sealed, and we don't wish to create any bias in this video.
At this point, you're probably realizing a sharp contrast between President Trump and Vice President Biden's tax policies. And you're probably wondering how all this may affect your investment portfolios and retirement accounts. Well, we're going to dive into that in the next video. But in the meantime, the one thing that you could do that is completely tax-free and won't cost you a penny is to gingerly tap that thumbs up button. Please, it'll help us a lot, and we'll see you next time.